This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Venezuela's state-run oil company PDVSA has begun cutting crude production because it is running out of storage capacity due to an ongoing U.S. oil blockade that has reduced exports to zero, piling more pressure on an interim government trying to hang on to power in the face of U.S. threats of more military action. Caracas is in political crisis under an interim government after President Nicolas Maduro and his wife were captured by U.S. forces on Saturday. The OPEC country's oil exports, its main source of revenue, are now at a standstill following a U.S. blockade on tankers under sanctions and the seizure of 2 oil cargoes last month.
Oil prices inched up on Monday as investors weighed whether political upheaval in OPEC member Venezuela would disrupt shipments after U.S. President Donald Trump seized Venezuelan President Nicolas Maduro in a well-supplied market. Brent crude futures rose 17 cents to $60.92 a barrel by 0024 GMT, pairing earlier losses, while U.S. West Texas Intermediate crude was at $57.43 a barrel, up 11 cents. The United States snatched Maduro from Caracas at the weekend. Trump said Washington would take control of the oil-producing nation and that the U.S. embargo on all Venezuelan oil remained in full effect.
Moving on to the top news in the energy sector.
South Africa's government said on Sunday the petrol pump price would fall by up to 66 cents a litre and the diesel price would decrease by up to 150 cents a litre from January 7. South Africa's fuel prices are adjusted monthly due to factors including global oil prices and the rand exchange rate. The statement said along with the decrease in the average Brent crude oil price, the local currency's appreciation against the dollar led to lower contributions to the basic fuel prices of petrol, diesel and illuminating paraffin.
Venezuela's oil production outlook this year will depend on how U.S. sanctions policy evolves, Goldman Sachs analysts said, after U.S. President Donald Trump deposed Venezuelan President Nicolas Maduro. The U.S. snatched Maduro from Caracas at the weekend and Trump said Washington would take control of the oil-producing nation. We see ambiguous but modest risks to oil prices in the short run from Venezuela depending on how U.S. sanctions policy evolves, Goldman Sachs analysts led by Don Struven said in a January 4 note. Next, we have the top news in metal markets. Shanghai copper rose on Monday to start the year on a strong note, as supply concerns intensified following a strike at a Chilean mine. The most active copper contract on the Shanghai Futures Exchange closed daytime trading up 2.68% at 101,350 yuan, $14,521.10 per metric ton, reclaiming the 100,000 yuan level on the first trading day of 2026. The benchmark 3-month copper on the London Metal Exchange climbed 3.42% to $12,896 a ton by 0715 GMT. Earlier in the day, the contract climbed as much as 3.50% and approached a record of $12,960 set last year.
Iron ore futures edged higher on Monday, beginning the new year on a firm note, supported by strong Chinese demand and ongoing supply constraints. The Dalian Commodity Exchange, DCE, and the Shanghai Futures Exchange resumed trading on January 5 after the New Year holiday in China. The most traded May iron ore contract on the DCE traded 0.76% higher at 795 yuan and 50 fen, $113.94, a metric ton, as of 0243 GMT. The benchmark February iron ore contract on the Singapore Exchange rose 0.29% to $105.65 a ton.
We will now look at the top news in the agricultural sector.
Chicago wheat futures ticked higher on Monday on uncertainty over Black Sea export flows and dry weather in the U.S. plains, while ample global supplies capped gains. Wheat, corn and soybeans all posted modest gains after 5 consecutive sessions of declines. The most active wheat contract on the Chicago Board of Trade gained 0.3% to $5.08 a bushel by 0353 GMT. Corn increased 0.11% to $4.38 a bushel, while soybeans climbed 0.53% to $10.51 minus 1/4 a bushel.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.